If you truly listen to Warren Buffett's words and understand the principles behind them, I honestly believe your financial life can change forever. Not because there is some hidden stock tip or magical shortcut to becoming rich, but because the greatest financial advantage in the world is not intelligence, it is behavior. And behavior, once mastered, compounds for a lifetime. I have spent years watching people make enormous amounts of money and still remain financially broken, while others with completely ordinary incomes quietly built lives of peace, freedom, and lasting wealth. The difference was almost never talent. It was discipline, patience, emotional control, the ability to delay gratification while everyone else chased appearances. Most people spend their entire lives trying to look rich. Very few spend enough time trying to become financially free. And those two paths lead to completely different futures. There is a reason Warren Buffett still lives in the same house he purchased in 1958 for around $31,500, even after becoming one of the richest men on earth. Most people hear that story and think it is just an interesting habit of a billionaire who happens to be simple, but it is much deeper than that. Buffett understood something modern culture constantly tries to make people forget. Wealth is not what you show. Wealth is what you keep, what you own, what continues working for you long after the excitement of a purchase disappears. Broke people often spend money trying to look successful, while wealthy people quietly spend years building systems that continue producing money whether they are working or sleeping. That single mindset difference changes entire lives. I remember reading about a young man who earned his first $100,000 salary before turning 30. Overnight his lifestyle changed completely. Luxury apartment, expensive watches, a $90,000 car financed over several years. Every dinner became an event designed for social media. Online, he looked incredibly successful, but privately, he was anxious every month because almost all of his income disappeared the moment it arrived. Then there was another man earning less than half that amount. Quiet person, small apartment, simple clothes, invested consistently every month into index funds and dividend stocks. 10 years later, the flashy man was drowning in debt, while the quiet investor had crossed $1 million in net worth. Same country, same economy, same decade, completely different outcome. That is the power of financial discipline and long-term thinking. One of Buffett's greatest lessons is understanding the difference between income and wealth. A person earning $500,000 a year can still be financially fragile if their lifestyle consumes everything they make. Another person earning $70,000 a year can quietly become financially independent through disciplined investing and intelligent spending. Wealth is not measured by salary alone. Wealth is measured by ownership, assets, cash flow, and freedom from desperation. Most people focus entirely on increasing income while ignoring the habits required to actually keep money. And without those habits, higher income often creates bigger problems instead of greater freedom. Modern society makes this even more dangerous because social media has turned appearances into a form of competition. People finance lifestyles they cannot truly afford just to impress strangers who will forget them within seconds. Someone spends $5,000 on vacations while carrying credit card debt, charging 22% interest. Another person buys a luxury car before building their first serious investment account. Consumer culture constantly encourages emotional spending because emotional consumers are profitable consumers. But Buffett's philosophy moves in the opposite direction. He understood that every dollar not wasted today becomes an employee working for your future tomorrow. This is why compounding is so powerful. Buffett often described compound interest as one of the greatest forces in the world. Most people hear those words, but never emotionally understand them. Compounding looks unimpressive in the beginning. That is why so many people quit too early. Imagine someone investing $500 every month, beginning at age 25. Another person waits until 35 because they want to enjoy life first. Over time, the earlier investor can end up with several $1 million more despite investing Only 10 extra years. Time matters more than intensity. Small consistent investments made patiently over decades often outperform emotional bursts of motivation and risky speculation. The stock market itself rewards patience more than excitement. Most investors lose money not because they lack intelligence, but because they cannot control emotions. Fear makes them sell during crashes. Greed makes them buy during bubbles. Pride makes them hold terrible investments too long because admitting mistakes hurts the ego. Buffett became extraordinary largely because he mastered emotional control. During financial crises, when everyone else panicked, he remained calm. While millions of people sold assets out of fear, he quietly looked for opportunities. He understood a simple truth that history proves repeatedly. The market transfers money from the impatient to the patient. I remember the panic during the 2008 financial crisis. News channels screamed about collapse every hour. Investors checked their portfolios with fear constantly. People sold quality investments at enormous losses simply because emotionally they could not tolerate uncertainty. Buffett moved differently. He understood that fear creates discounts. Temporary panic creates long-term opportunity for disciplined investors. This emotional stability is one of the greatest financial advantages a person can develop. Someone who remains calm while everyone else becomes emotional already possesses a powerful edge. Another important lesson Buffett demonstrates is simplicity. Most people think successful investing must be complicated. Endless technical analysis, constant trading, complex strategies, secret information. But Buffett built extraordinary wealth following principles simple enough for almost anyone to understand. Buy quality businesses, hold them for a long time. Avoid unnecessary risk. Stay patient. Repeat. Simple does not mean easy because emotionally people crave excitement. Many investors trade constantly not because it improves returns, but because activity feels productive. Buffett understood that movement and progress are not always the same thing. Sometimes the smartest financial decision is patience. There is also enormous wisdom in living below your means. This principle sounds basic, yet modern culture treats it almost like failure. People borrow money to maintain lifestyles they have not truly earned yet. Credit card balances grow every month. Cars are financed for 7 years. Expensive lifestyles become traps disguised as success. But every unnecessary expense quietly steals future freedom. Spend $1,000 carelessly today, and you lose not only the money itself but decades of potential compounded growth that money could have created through investing. This is why many truly wealthy people appear ordinary. Quiet millionaires exist everywhere. Teachers with large retirement portfolios, couples driving modest cars while owning multiple paid-off properties, small business owners quietly investing for decades without seeking attention. Real wealth often hides because attention creates pressure. The moment people know you have money, expectations appear. Friends compare themselves to you. Relatives begin calculating what you should contribute. Sellers adjust their prices upward based on perceived wealth. Privacy disappears. Buffett understood that financial freedom requires protection from unnecessary social pressure. And perhaps one of the most valuable lessons Buffett teaches is avoiding unnecessary debt. Debt removes flexibility. A person buried under debt loses options because survival becomes the priority. Stress increases. Fear increases. Bad decisions increase. High-interest consumer debt is especially destructive because it compounds against you instead of for you. A credit card charging 20% interest quietly destroys financial futures while people continue spending emotionally without calculating the long-term consequences. This is why delayed gratification matters so much. Buffett's philosophy rewards patience above almost everything else. The ability to sacrifice temporary pleasure for permanent freedom. Most people reverse this equation completely. They sacrifice permanent freedom for a temporary pleasure. A luxury purchase creates excitement for a few weeks. Financial freedom creates peace for decades. One disappears quickly. The other transforms an entire life. And peace is the real purpose of wealth. Not social media attention. Not impressing strangers. Not looking successful online. Real wealth is the ability to wake up without constant financial anxiety, to handle emergencies calmly, to make decisions without desperation, to sleep peacefully because your future is protected. Money itself is not everything, but lack of money creates endless avoidable suffering. Buffett understood that financial security creates emotional stability, and emotional stability creates better decisions across every area of life. Another reason Buffett became extraordinary is because he protected his attention. Most people drown in distraction, endless scrolling, endless entertainment, endless outrage. Attention becomes fragmented until deep thinking becomes impossible. Buffett spends huge amounts of time reading because knowledge compounds exactly like money does. A person reading consistently for decades develops an enormous advantage over someone consuming random entertainment all day. Knowledge compounds, skills compound, relationships compound, investments compound. Life itself is a compounding system where small actions repeated consistently create massive long-term outcomes. And maybe Buffett's greatest hidden lesson is humility. Truly wealthy people rarely need constant validation. Ego destroys investors because people care more about appearing smart than protecting capital. Humble investors survive longer because they admit mistakes quickly and continue learning. The market eventually humiliates arrogant people, always. That is why humility itself becomes profitable over time. At the end of life, financial success is not really about becoming the richest person in the cemetery. It is about building a life where money serves you instead of controlling you. A life where opportunities exist because savings exist. A life where decisions come from freedom instead of fear. Two people can earn the same income and still end up with completely different destinies based entirely on habits. One spends emotionally, borrows constantly, chases status, panics during uncertainty, and remains financially stressed forever. The other lives below their means, invests patiently, controls emotions, ignores unnecessary comparison, and quietly becomes financially free. That is the real lesson behind Warren Buffett's success. Wealth is not built through magic. It is built through disciplined behavior repeated for decades. Patience over excitement, ownership over appearance, long-term thinking over short-term emotion, silence over unnecessary attention. If you truly understand these principles and apply them consistently, your financial future can change in ways that are difficult to imagine today. Not instantly, not dramatically, but quietly, permanently. And perhaps that is the final truth about money. Real wealth rarely arrives with noise. It arrives silently after years of invisible discipline until one day you wake up and realize the life you once dreamed about has quietly become your reality.